Hi everyone, welcome to another weekly episode. This is the third episode. I'm enjoying this series very much called This Week in Investing and Finance. I don't know exactly how to make the title, but I think that's an okay title. I guess it's May 7th, isn't it? That's very strange. I guess I was working on this yesterday, so that must explain it. But thank you so much for joining me, and I really appreciate you being part of the series and giving me some interactivity. So anyway, this slide's pretty boring. I just wanted to go through a few of the things that happened this week. The media made a big deal out of the Puerto Rico bankruptcy. What's interesting about Puerto Rico bankruptcy is that the so-called GO bonds, or the general obligation bonds, which are the 2035 maturity, so 18 years from now, those already defaulted. So Puerto Rico's more or less been in bankruptcy for a year, and in fact, I checked the prices on those bonds from a year ago, and they're about the same price that they were a year ago. There's 12% unemployment, 73 billion in debt, but I looked at the income statement, and I saw that the revenue and expense line aren't too far apart. So it's a $3 billion deficit a year, which is about 20 years or so of debt. But I could see this work out okay. Again, I'm not saying I'm rushing in to buy Puerto Rican bonds. I'm not a municipal expert, but for municipal, this is a pretty good. Oh, I forgot to put the coupon here, but I think these are 8% bonds. So you're talking about a pretty big yield. Not I mean, we'll see if it gets restructured or so-called haircutted. But and if you have any questions on this, I'm happy to add that. But in essence, this is an interesting piece of news. Again, Puerto Rico's been having these problems for a long time, but this isn't that different. If you actually think about it as a microcosm for the U.S., this is actually kind of not totally different from where we're at. So, it's a small municipality, obviously, compared to the U.S. government. You'd have to add, I guess, not three zeros, but let's see, a few zeros to get scale up to the entire U.S. But the idea that these bonds are trading at 64 cents, but in fact they're sort of have the sovereign protection of the United States. You would argue that and the U.S. is trading at 2% type yield. It's something to consider. If you really look at the U.S. balance sheet, it's not. It's not that different. We're not at 12% unemployment, but that would even argue further for my point. So, in any event, the Puerto Rican so-called bankruptcy was kind of interesting. Obviously, the Buffett meeting was this weekend. If you didn't watch that, you can go try to find a replay. So I recommend following everything that Buffett does or says or etc. And there's recently a video in Yahoo Finance that I really enjoyed, actually. That this video was really good because you got to hear from Combs and Wexler, which one doesn't often get to hear from, and all three of them in a room is kind of cool. The annual meeting was fine. I to be honest, like, there's diminishing returns in listening to people kiss Buffett and Munger's ass for hours and hours, and there's a little bit of diminishing returns and kind of the bad questions, of which there are plenty. So from my perspective, it's somewhat useful. But one of the things that I found pretty useful, other than kind of the banter and the faux Nebraskan Midwestern charm, is the idea that Buffett at his core is sort of a master of the basics, which is something I advocate for quite a bit. And the most interesting things I think he talks about is his sort of grasp on the real nitty-gritty of return. What is return on an asset? What is capital really? He had this really interesting phrase about depreciation that I thought was really fascinating. And depreciation being the opposite of float, which was particularly interesting. He had some interesting comments on interest rates and discount rates. So occasionally you'll listen to Buffett sort of whacks on some of these really elemental parts of finance, and I think some of them are I think just like him and Munger are masters of their craft, and they don't let on as much as going on in their head. And sometimes when you see these parts, you can really tell that they really have a really good understanding of this stuff. Munger had some interesting comments on China, which again, I'd refer you to the video. He basically said the best public equity opportunities right now are in China, which I thought was really interesting. Berkshire doesn't have many Chinese stocks, if any. I don't think so. Anyway, watch the annual meeting, but I think everyone knows when the annual meeting's happening, but you really want to look for these little nuggets of pieces of media, and especially the older stuff you can find. There's this really old Buffett thing called, I think it's called Super Investors, and let me see if I can find it real quick. Super Investors, Buffett, yeah, okay, it is Super Investors, and if you can find this, it's super old, here it is, and it's from quite a long time ago, and it was actually written by Warren Buffett a long time ago, so you can check that out. I don't know when, it doesn't have the date on it, I guess, but it's about as old as it looks. I'm sure it's in there somewhere. But anyway, my point is, if you find this stuff, you can see he still has some dark hair, so there you go. But the point is that there's some really good stuff out there that's older. You know, the newer Buffett stuff is interesting too, of course, because he's just gotten smarter, but there's some really old articles that I'd encourage you to read as well, and you can kind of see how he sort of grew up as well. Okay, so there's some stuff going on in China that's a little weird. I personally am not afraid of any of it. I think there's a pervasive sort of fear right now that the Chinese economy is slowing. The Shanghai Composite is actually flat for the year, whereas the Nasdaq and the S&P are up substantially. And this is causing this big ripple effect in commodities, and specifically Chinese bond yields are up, which is a little scary. So anyway, stay tuned. Sometimes these kinds of they say when the U.S. catches a cold, China gets the flu. So we'll certainly see kind of what happens with China. But I don't think there's a reason to be alarmed quite yet. But the Chinese government's actually causing some of this themselves. They're sort of systematically trying to get risk out of their system. And Buffett actually said, markets have a casino-like atmosphere, and I think in China that couldn't be more true. And the government there is wisely trying to stamp out a little of the excess speculation. So we'll sort of see what happens. Again, some more boring stuff here. I'm not a news reporter, so like I said, I'm not going through the news, just stuff I saw and I think is interesting. I certainly, it wouldn't be a service for me to summarize the news for you every week. I don't think that'd be very fun. Obviously, everyone saw the Apple report, and the China down year over year is pretty interesting. Their own phone companies are really, again, we'll make the case in a minute that phones aren't really phones, but they're just small PCs. That companies like Xiaomi and others are really the impressive companies of China, and that Apple is kind of whatever culturally or price-wise, they're just not a great fit for China, which is kind of interesting. All the pharma stuff was in line. I listened to the Facebook call, which I thought was, it's really incredible how much they're growing, and we'll talk a little bit about how and why that's happening, and maybe why I think it will continue, especially vis-a-vis maybe a Google. Gilead is a stock I like a lot. They reported earnings, and I thought the quarter was actually phenomenal. Their HIV business is growing much more rapidly, and they're transitioning patients from the old off-patent drug to the new on-patent drug, and more than just patent tricks, it's actually a good thing. The new drug's better than the old drug. But financially, it's also very important that nobody takes the old drug anymore, because the patent's gonna expire. So there's that. It'll be always interesting to see Valiant's earnings, and Teva's a large cap company, the biggest generic company, that I'd like to see how they do. One thing that was a little bizarre is Pfizer reported earnings, and Pfizer bought a company called Medivation, which has a drug called Xtandi, and I thought it was a typo when I saw it. They spent like $10 billion to buy Medivation, but the revenue from the product is only $100 million a quarter, so it's $400 a year. So I must be missing something, but a lot of people are commenting about it because it's just strange sort of a strange phenomenon. It must be a revenue recognition problem, but it's sort of something to sort of pay attention to. Couple quick things here. Some stocks I've looked at. There's this company in France called Abivex, I think it's called, and their stock went from €5 to €15. At one point, it was at €25, and they talked about having an HIV, sort of like an HIV Abivax, an HIV drug that. First ever evidence of treatment-induced reduction in HIV reservoirs. They actually had a reduction in patients human beings who had active HIV infection. So pretty crazy. And I've been saying this for a while, that I think that in 10 years HIV will be a treatable, curable, clearable infection. So again, maybe it's 5 years, 10 years, 15 years, I don't know, but it's happening soon. And in fact, it's one of the things that I think Turing should probably work on, to see if we can take some of the Daraprim profits and try to study stuff like this. Maybe we could buy Abivax or something, I don't know. But it's an interesting, again, I don't know if this is the company that's going to do it or not, but if you look at their stock, it's only €150 million market cap, which is, a cent, not even a 1/10 of a cent of what it would be worth if the treatment got FDA approved someday. So at €16, it would be like, I don't know, €1,600 if this all panned out. So there's a lot of promise still in an HIV cure, I think, and there's very few companies working on it. Regeneron went up a lot. It was actually the second best performing stock for the week in healthcare, even though it's one of the biggest market cap companies. So I'm really proud to see that stock idea working, and I think that'll, again, I'm not sure it'll go up 10% every week, but it definitely won't, in fact. But it's interesting to see it work, and I've talked to some other market participants who have sort of seen it continue to go up. I think eventually it'll go to like $600 or $800 or $1,000 a share, but we'll sort of see. It's a very big company. It's not supposed to be sexy and exciting. But I was gratified to start seeing that stock move a little bit. Valiant is starting to rock a little bit, as are other spec pharma companies, in this prayer that the Acorn acquisition is showing us that there might be some latent value in some of these beaten down spec pharma companies. Speaking of beaten down spec pharma companies, Lannett had a really bad quarter. I guess AMAG did too. I have to look at that. ITSE Intercellular is a company that I always hated, and I kind of think it's a piece of crap. So I'm not happy to see their stock drop, but I guess I they have this like antipsychotic that's they pretend is different from the last 20 antipsychotics, and it isn't. Neurotrope is something that I think you guys probably have heard me talk about. Their fake company is being proven to be fake, which is nice to see for those of you who have bet against it. I certainly have. Some stuff not too interesting, but there's a couple notable moves here. I won't go through any of them, but I guess one, if I'm watching any one of these, I guess it would be, I don't know, they're all like not that noteworthy, I guess. We'll see what happens. So get to some more interesting stuff. Oh, I think I'm going to start doing this slide more often, just sort of my current opinions on stocks. This will multiply dramatically, obviously. I have more opinions than just these, but I think what was interesting, not only when we were guessing my weight earlier, and remarkably we had like 50 guesses or so, and the mean of the guesses was actually 0.2 pounds different from reality. And the reason I did that, not only was it a lot of fun, and I hadn't weighed myself in a while, but it's shocking to me how efficient the market is. We took, basically a market is an array of opinions, right? And we took this market-based, I guess, test of my weight, and it turns out that it was 156.2, I believe, was the market, or in other words, the average of all your guesses, and 156.4 was the actual weight. And the reason I mention that now is that if you look at this current opinions, I actually think that my guess is, I skimped out on this sort of fairly valued thing, but my supposition in the markets in general, I think you guys probably have heard me say this before, is that for every 10 stocks you look at, one is undervalued and one is overvalued. And I started to write down the fairly valued ones, and you can see I got bored pretty fast because most stocks are fairly valued. But if you're doing your calculations and every time you look at a stock you think it's really overvalued or really undervalued, you probably are not looking at it correctly. Your process isn't that robust. You suck, in other words. And you should not be finding every stock overvalued or undervalued. Every now and then you should find an undervalued or overvalued stock. And obviously those are the ones we tend to care about, so I wrote these down real quick. And you could build a portfolio off these. Again, I don't suggest you necessarily do it, but there's 13 stocks here, so you can get some diversification. And here's some stocks I'm looking at very actively. So I'll make this a bigger list over time, and the fonts will start to get a little smaller. But I think it's important to sort of jot down what you're thinking. This week is, by the way, pretty heavy on healthcare stocks, and then when we get to tech, we'll talk more conceptually. But tech right now is undergoing a lot of conceptual changes, whereas drugs are pretty boring. So some healthcare news. This stuff was really off. I think a lot of this is off the beaten path. So there's a drug called Radicava, which got FDA approved. Nobody was talking about this because it's a Japanese company that got FDA approval. And they did one Japanese clinical trial, but it was actually a relatively well done clinical trial. And drug versus placebo, about 65 or so people in each arm, and ALS. Oh, sorry, I didn't write down what it was approved for. You must all be curious. So ALS is Lou Gehrig's disease. It's about a 6-month survival. I think a lot of people don't know about Lou Gehrig's disease is that from diagnosis, it's about a 6-month median overall survival, which makes it one of the most fatal illnesses, sort of akin to metastatic lung cancer or something. It's maybe even worse. It's a really rapidly, progressively fatal illness. Obviously, ALS is a heterogeneous disease. It's probably 50 different, motor neuron illnesses combined into one. But interestingly, this drug got FDA approval. They did a study in Japan, which traditionally is not enough for FDA approval. You have to do a study in the U.S. So it'll be interesting to see if they have to do that eventually. But this drug is FDA approved today. You can prescribe it today, which is really interesting. So why do I mention this? Obviously, it's fascinating, the first new drug for ALS in a very long time. But when I look at this molecule, this is the molecule. It's hard to tell, kind of how this is working. And part of, and the company hasn't specifically delineated, it wasn't rationally designed. So as an investor and an entrepreneur, immediately, just so you guys get a sense of my thought process, I look at this molecule and I say, well, okay, what can I do better? Can I figure out what genetic subgroup of ALS would respond more favorably to this drug? Can I take this drug and tweak it? Does it need to get into the brain? It's somewhat lipophilic. I can make it more lipophilic by hanging some more, different alkene groups over the methyl over there that hangs off the it's one of these. This is a 5-member group, pyridine or pyrrolidine, I think. I forget. But it's this group here, this 5-membered ring. So there's other things you could do to this molecule conceptually. Again, if you don't know exactly what you're after, that's one thing. But also remember that you have the pyrrolidine. There you go. You have this an assay, which I think you can just do it in animals, right? So you can create 100 derivatives of this, throw them in animals with the SOD1 mutation of ALS, and see which survive the most. I mean, that is one feasible way to do a medium throughput screen of this drug. And if you did that, you can create, not only longer life for people dying of ALS, but you could actually, also create billions of dollars of wealth. So that's a project that I might sic one of my associates on. It's kind of a cool idea. The Furrier study was published in the New England Journal of Medicine. For those of you who don't know, it's the evolocumab PCSK9 inhibitor from Amgen called Repatha. And the results were fantastic. They have about a 15 to 20% reduction in cardiovascular events for patients who are not well controlled on statins alone. And this drug isn't selling very well. It's only selling about $200 million-ish a year. Now, statins sold $20 billion a year with relatively similar type of data. So I wonder if Amgen and the other 3 companies in the space are going to clearly sales will pick up. But the question, and I don't think they'll ever pick up to the point where these are 5 or 10 or $15 billion drugs. But I had to update my Amgen model to go from a little less than $1 billion in Repatha sales to a little about $2.5 billion. I think is where it'll shake out. Again, it's all guesswork, but it made Amgen kind of cheap in my book, and it might also make Medicines Company not such a big short, and it could even have an impact for Regeneron and Sanofi. Obviously, there's a big patent fight with Amgen, but my guess is if you're Amgen, it'd be really smart to settle with Regeneron and Sanofi and take a, say, 10% royalty or 5% royalty, and that way both companies or all three companies can kind of build this PCSK9 business. I think it'd be best for Amgen that they weren't the only drug on the market. As crazy as that sounds, competition in pharma is actually a good thing for the companies more than anyone else. Tofacitinib was also published in the same New England Journal. This New England Journal actually had 3 really interesting pharmaceutical-related kind of papers, which has been a while for the New England Journal to have really interesting industry stuff, at least. So tofacitinib is Pfizer's JAK inhibitor. This drug was sort of released to major fanfare that it would be the oral Enbrel or oral Humira, and it hasn't been selling really that well at all. And finally, this ulcerative colitis data is UC. Ulcerative colitis data, I had to look pretty far and wide, but I found the Humira ulcerative colitis data, and it was actually almost identical. So Humira is still, again, for whatever reason, people don't mind the injections too much, and Tofa is not selling that great, so it'll be interesting to see, kind of what happens with Tofa. But it really does seem like the efficacy is just as good as Humira. The safety is relatively good, but again, for whatever reason, you have this big entrenched competitor that it's tough to really unseat Humira. So we'll see if Pfizer can get Tofa going, but certainly the evidence is piling in that it's just as good. There's an IGFR drug. This is insulin growth factor, and these drugs, if you recall, failed they failed for different cancers. And a small company, not unlike some of the companies I've run in the past, bought one of these drugs from one of the big pharmas, and that's the kind of strategy I like as well. And they actually ran a study in Graves, which is an autoimmune disease. And so Graves, interestingly, causes this some ophthalmic disorder. I don't know it too well. And they did this study with this. It's a systemic drug you take by IV, but they had these profound beneficial changes in the eye. And this was the third interesting paper in the New England Journal this week. And this company has probably paid maybe $1 million or $2 million for this drug. They paid $5 or $10 million to do the clinical trial, and the company's probably worth $1 billion now. Which, if you think about it, is really an amazing achievement. So hats off to those guys. Now, of course, being the capitalist I am, and I kind of want to buy an IGF-1 drug myself and start to copy it or do something like that. So it's kind of interesting to see that happen. There's a company called Malindo, which is not a well-known company. It's a private company, really interesting company that's has this drug for hot flashes or vasomotor symptoms that some people call it that. But this is postmenopausal syndrome. And what's interesting is this drug has nothing to do with estrogen. So it's a totally different mechanism called NK3, I think. And this is the first data ever, I want to say, that suggests that you can treat, if you want to call it treating, but you can address the symptoms of hot flashes with a drug that has nothing to do with estrogen, which is what people want. Estrogen can cause, as you all know, some breast cancer and other things like that. In fact, estrogen fuels breast cancer. But in any event, that's something that is kind of interesting. In the Lancet, again, that was published in the Lancet. In a second paper in the Lancet, is not really stock or investing related, but super interesting to me because, I don't know, maybe you can create a business about it. People who are quadriplegic and tetraplegic, which is sort of one of the other drugs I own that not many people know about, treats some of the symptoms that happen when you're paralyzed. And so I found this paper to be one of the most interesting things, and remarkably, I think more companies should do this. They actually have a video of it. And again, if they're not creating a company around it, they should. But it was one of the most breathtaking things I've ever seen. So I'll kind of narrate it a little bit. But this patient is tetraplegic. And what they did is they actually implanted something in his motor cortex. so that he has a prosthesis in his motor cortex, and he has these different surgically implanted sort of stimulators, nerve stimulators, in his actual arm, and he can actually move, which is amazing. He's still paralyzed, so it's this really unbelievable situation. So you can see he's moving. People who are paralyzed, what they often can do is they can move little parts of their faces, a tiny bit, and so the motor cortex is still there, but obviously the connection is severed. Nevertheless, you can take those small changes in the motor cortex, those nerves that fire, and sort of map them and train the patient, as you can see, to map them to the point where he can perform flawlessly. This is the first ever patient report ever of a something like this. There have been prosthetic arms that people control, but you can see this is his actual arm. This isn't a prosthetic. This is his actual arm coming back after being tetraplegic, and it's not like they're re-sewing the nerve, which is often some people think, oh well, these patients, paraplegic, quadriplegic, you could somehow get stem cells and maybe regrow that broken connection. No, his spine is severed. So it's a really unbelievable thing. He has a brain implant in his motor cortex. So they opened his head up, put something in his brain, and it receives those signals, and it can determine what signals it sort of trains such that he can map those signals to his arm signals, which are in another surgical attachment. So if you're interested at all, go to the Lancet and you can read it. But it is really, I found it to be pretty amazing. Again, not an investment per se, and in fact, it sort of illustrates why we do need sort of an academic industrial complex. But could there be a company that actually makes these devices or whatnot? There's actually a ton of people who are paralyzed, mostly due to motor vehicle injuries. And I mentioned I have some involvement in this space because of another drug I own. But maybe I should start a company that sort of commercializes this invention. So in any event, really interesting stuff. Anyway, let's get to some other things. So in technology, I don't have a lot to add on the stock side. I'm kind of tuckered out from earnings, but there's something you should all sign up to. It's called Benedict's newsletter. The guy, I think his name is Benedict Evans, is a partner at Andreessen Horowitz, the venture capital firm, and he has this weekly newsletter. It's really good, I think, and this is one of his slides, and it's probably one of the better ad spending slides that I've seen. It's sort of a we'll get to flying cars in a second, but it's a slide that kind of goes through internet advertising in general. And you can see before the internet, there was no internet advertising. Well, that makes sense. And around 1998 and 2000, it just started, right, with companies, I'm sure, like AOL and Yahoo and so forth. And then you could see Google kind of showing up, and then here in the last 5 or 6 years, Facebook kind of shows up. But what's interesting is it's about a $500 billion global business, and pharma is about $500 billion. It's a little bigger maybe now, as well. And you can see that the total pie is not growing too much. In fact, if you look since 2000, it's not growing too much. If anything, it's just that the print side of the pie, like newspapers and whatnot, magazines, is shrinking. The TV side hasn't started to shrink yet, but you can guess that it's going to shrink a lot. 2008, we had a recession. I don't know if you remember that. So that's the dip there for a small dip. But in general, the point is the data year to year isn't perfect, but the point is that here you have, TV will probably get crushed. I mean, people are going to watch less TV. I think we can all appreciate that. It's not going to go to zero because there'll always be, kind of advertising that you could do on the internet before programming. But, in essence, you could see the so-called TV channel, which is about a third of all advertising, drop. Now, there's inventory problems with TV that we can talk about at some point, but in general, a lot of these internet tech businesses are advertising businesses, so in many ways, we can think of them as ad tech. In any event, the point is that the reason I bring this up is that if you look at Google, they have about $100 billion in revenue. So I was looking at my Google model, and the issue to me is that they are really starting to crowd out kind of the upper realm of possibility of what their revenue can be. They can't be the entire global ad business, right? I think we can sort of agree on that. The issue to me is that the pendulum is swinging from the likelihood that they are going to continue being the disruptor to that they are in fact now going to be disrupted. And it's this concept that about 15 years ago, a friend of mine from SAC Capital mentioned. He likes to use the phrase parasite or host. If you're a really successful parasite, you end up becoming the host. And that's a concept that I think gets lost on the marketplace often. Now, you can survive as a really big host for a long time. Just look at IBM and some of these other businesses. But it's sort of difficult to envision Google becoming a lot bigger than where they are now. Now, maybe the revenue can double to say they're about 100 billion now. They could double to say 200 billion, and the stock would do really well. It would be a much bigger company. But at the same time, one must wonder kind of where more growth will come from. Again, Facebook is about a third of that revenue, roughly. They're growing much faster than Google. But the point is that it's at some point these sort of companies will have to run into the law of, I won't say law of large numbers, but just the law of market share, that this parasite host law, that they just can't get to a point of owning the entire global ad business by themselves. And maybe they can, maybe someone smarter than me knows that they can, but I struggle with that every time I look at Google. Again, they can have several more years. The good thing about Google is that, maybe I should just pull up my model. Let me do that. So again, they'll do 110 billion this year of revenue, and 33 billion of income. And in my model, they don't need to be heroes. The stock is still long. In fact, 46%, a $900 billion company. It's kind of crazy to even say that. If they can they don't even have to double their ad revenue. They can just get to 170 billion. But if you look at global ad revenue, they'd have to have 30% of all global ad revenue. If you think about that, it's a little nuts, right? Every single ad in the world, they'd have to have 30% of that business. And again, I don't even have them sustaining that. I have them kind of starting to decline and some disruptor happens. The problem with disruptors is they happen faster than this. Revenue starts to drop not 2%, but 10 or 20 or 30%. And so let's take a look at what happens if it starts to drop 10% a year. Then in fact the stock is exactly fairly valued. But if it gets disrupted, say faster than that, like maybe a Yahoo type disruption, you're really looking at a stock that isn't going to do great. But at the same time, you can see that the risks are somewhat skewed to the upside still. So I'm not sounding the alarm quite yet, but again, and they obviously have an opportunity to get into hardware and cloud and all the things that they want to get into. But it's important, I think, to think about investing from the sort of the market perspective. But now, if you think about where they were, sort of back here, you can see why, again, the law of large numbers doesn't apply. In fact, that's sort of what's happening to Facebook, is that if you go back, way back when, you sort of have a company that can grow at 50% a year or even accelerate. And that's what happened to Google, and that's why when they IPO'd, it was such a great long for people who are conceptually sort of woke, if you will, about how to think about disruptors and disruptive investments. Steve Mandel, particularly at Lone Pine, the best at that, I think. So Benedict also talked about flying cars, and flying cars have been in the news lately. Financial Times is where I pulled this graphic from, sorry, without permission. Pulled this from the FT, but Uber was in the news because they're starting to think about testing flying cars. Most of these are not, are just sort of cartoons. But ultimately, the Kitty Hawk is at, in fact, I believe that's this one here. And that's been tested. And if you haven't seen that, you can Google some of these. Terrafugia was a company I actually thought about investing in. So some of these have actually had their first flights. It'll be really interesting to see how this field goes. Benedict actually talks really intelligently about autonomous vehicles, and I'm going to talk about that in a second. But the impact that these innovations can have on productivity is what I'm going to talk about. But I'm not sure that flying cars are necessarily the biggest productivity boost to come in the next few decades, but it's certainly not going to be a small one. once these are commercialized. Again, how exactly they can commercialize and how exactly they can be safe, things like that, we'll have to think about. They could be autonomous. Again, one could worry about hackers and things like that, but we'll have to really think hard about the kind of productivity gains we could see from these types of vehicles and the business opportunity that exists. But the fact that everyone has a flying car, everyone's talking about a flying car, everyone's developing one. There's the Uber Elevate that starts in 2020. The Airbus has one. I don't know who Joby Aviation is. I don't know who eHang is. But I certainly know Kitty Hawk is the Google guys. Terrafugia is a kind of a scrappy startup that probably will fail, as will these guys, Lilium. But it is certainly interesting to hear about flying cars in actual sort of a serious sense. It's pretty remarkable. There's this bad article about Apple in the New York Times. I thought it was sort of the skeptical article. I thought it was pretty crappy. The biggest question about Apple that I'm starting to come to grips with is just what will this sort of small computer, mobile computer, or phone, smartphone, whatever you want to call them. These aren't phones. These are computers. I happen to have two of them. What will that cycle look like? And if it'll reflect sort of the PC cycle, Apple's in trouble. Apple will become Compaq, Apple will become Hewlett-Packard, Apple will become Dell, and Apple will be a great short. And so there's a few things that kind of explain both. So the first is that history repeats itself, and that inevitably, margin and return will get squeezed away, and that's what happened with computers, and there'll be no more magic sauce. Early in the cycle, it seems like it's nirvana. That's what happened, by the way. One of the first investments I ever made was in Compaq Computer. There's so much growth, there's so much, excitement, and then companies like Xiaomi come along and they decide to make your smartphone for $100 and, goodbye Apple. And that could happen. And what happens in those cycles is that the refresh cycle lengthens dramatically, so you don't buy a new phone every year or twice a year, you buy one every 3 or 4 years. And that's how PCs tend to operate. But you could get some pricing upside, and that's what we're going to see with the new iPhone 8. It's clear that that's going to be $1,000 phone, which is or possibly more, and that's something that's obviously great for Apple. So then, with respect to sort of the answer no, that phones in fact won't look like the PC cycle. It's hard to sort of know for sure, but we can all agree that sort of these mobile-ish computers, whatever we want to call them, because phones are not what we buy them for, I would say. That these are a bit more useful than the old PC cycle, but nevertheless, I think it's going to succumb at some point to the same sort of problems, in essence, that we tend to see from the old PC cycle. I'm old enough, not that old, I'm 34, but I'm old enough to remember the PC cycle and the excitement about PCs and why they were so important. In fact, we had a PC at the office and we had a PC at home, maybe two. And so there were so many reasons to belong Dell and Hewlett-Packard and Compaq and Gateway, if you can remember that company. And they're all gone now. Nobody wants to make PCs anymore because they are components that are commodities, and the PC companies are commodities, and no matter what they could do to change form factor and all kinds of things, everybody lost and all the companies disappeared. So I've been skeptical of Apple, and the growth always looks good as on the way up, and they've been very disciplined about their capital and so forth. It's a well-run company, no doubt. The stock doesn't look like some massive short to me or anything. I just, that's sort of, maybe this is self-help for missing the big move in Apple, but, I just sort of a word of caution. The negative article in the New York Times didn't touch on any of this, which is sort of the, I think, intellectual way to look at Apple, but again, that guy's not a well-known, successful investor. All right. So this article, I read about productivity in the news. The Bureau of Labor Statistics reports productivity every quarter. Productivity fell 0.6%, and the way they measure it is kind of interesting. It's a quarter over quarter annualized figure. So the quarter over quarter change, if you annualize that, was negative 0.6%. And productivity can be member gateway, exactly. The productivity is simple. It's just output of work per hour, which you can just think about GDP, say per hour worked by the workforce. And that measure is really important to everyone. And there's some, I'll wax a little bit philosophical on it for a second, but it's really important that that we get more out of our workforce over time, over long periods of time. And that's the reason for the oh no's meme. When I was a kid, there were very few memes. We had to walk miles to school, and we had very few memes. Now there's a lot of memes, but oh no's was one of the biggest memes when I was a kid, or not even a kid, just 10 years ago. Oh no's was about all we had. And we'd often have a Z at the end of the oh no's, but enough about oh no's. The productivity is one of these things that really drives economies, and GDP can't really grow without it, because the number of hours people work is more or less the same. So if you think about why GDP grows, it's almost exclusively from productivity. So just think about that for a minute. It might blow your brain a little bit that when you measure growth, you're really just measuring productivity. There's some caveats to that, and price and inflation and things like that, but we'll talk about maybe at a later date. But it's sort of interesting how important productivity is. And if you think about why markets may not be zero-sum or negative-sum, as sometimes I say they are, productivity is the one reason they should be. Now, should productivity increase forever? Well, Buffett talked about this a little bit at the annual meeting, that if we didn't have productivity, and he basically had to answer the question as to why he partners with companies that fire people. And he sort of said, oh, well, if we weren't in his Midwestern Omaha shtick, which I do think is a shtick. He says, oh, well, if we didn't have productivity, we'd still be farming in the 1700s. And while that's true, there's also another perspective on it, which is that if we get really productive, when I was a kid, I used to read Ray Kurzweil's books about how we'd approach this level of accelerating productivity, also known as the singularity. And I want to go through that in a minute. So should productivity, as we get more tools to be even more productive, should that get logarithmic at some point and reach an asymptote and become exponential? I'm not so sure. We'll talk about that shortly. But ultimately productivity does matter a lot. So what drives productivity? Well, I did this, and this is a bit to make fun of the productivity figures that the media came out of the Bureau of Labor Statistics, that, oh my God, 0.6%, negative 0.6% is this big disaster, and that productivity needs a kick in the butt. So productivity has been low for several years, and I'll talk about why in a second, but you can't really look at a quarter of productivity. Productivity doesn't really work that way. You have to look at decades of productivity. So I did that, and I actually had to reverse engineer the annual, it's not too hard, the quarter annualized rate, and take it and make it an annualized rate, or the other way around, make it a true quarterized rate, and then I took an 8-quarter moving average and made it an annual rate again. So I did some transformations here, but this is what productivity, reverse engineering, aka dividing, but no, it's like a dividing, reversing an exponent, I guess, but anyway, the point is, here's the annual 8-quarter moving average annual rate of productivity over the last 60 or 70 years. And when I think of productivity, what I think about is these big moments of kind of, why do we go on, why can we extract, and the next slide will be really take this home, why are we able to extract more work per hour worked? And it's sort of a beautiful thing if you think about it. And the next slide will show how much work we've gotten out of the same amount of work. Humans have not worked any more or any less than they did in 1949. Maybe, in fact, we were working less. But the point is that we started out with things like computers and all kinds of plastics and other industrial advancements, satellites and memory and microprocessors. And these are all, remember, it looks like, what's important here is that not that you think about the trend in productivity. That is absolutely not important. And that's why I think, again, I see science writers and business writers who don't know anything about science and business, which is so painful to read this stuff, which is why I do this series, to try to explain what this stuff really means. Anything above the zero is good. Basically, any time this thing is above zero, it's good. And 2%, 1%, 3%, it doesn't matter really what the number is. And we'll talk about why in a second. But what's kind of interesting is these really big kind of things that happen once every 5 or 10 years. You can see the start of financial engineering. What I meant by that is the LBO, when LBOs started with the Drexel Burnham and Michael Milken LBO phenomenon in the 80s. Companies like Goldman Sachs and JP Morgan said, maybe we shouldn't be these boring banks. Maybe we should actually do some cool stuff. And that actually is a form of efficiency, as are some other things that you may not sort of appreciate, like the medicines boom. What does medicine have to do with efficiency? Turns out a ton. Just things like Prozac made us more efficient. So you had these sort of like this big productivity nirvana with the internet, computing, some first-time medicines for a lot of different illnesses. And now we've had this kind of trend for the last 10 years that productivity sort of declined, if you will, but it really doesn't make sense to think of that way. I do think we're in for another productivity boom. Benedict at Andreessen Horowitz writes about how much autonomous vehicles are going to improve productivity. And if you read Adderall, if you read anything from this, I'm so happy you're spending an hour with me. But if you read anything, read Benedict's talk about or his blog about autonomous vehicles, because I think, in fact, it's so important. I think let me just pull it up here. Benedict Evans, not Benedict Cumberbatch. That's ben-evans.com, and there's this little blog, and it's called 10-Year Futures. And if you read this, I think it's great because it talks about how autonomous vehicles are going to change the way we live, sure, but from my perspective, I think about it as productivity and how much more work we can get done with the same amount of human capital. In other words, hours worked. We can actually produce a lot more. So I actually think I put down a list of kind of things that I think will improve productivity over the next 10 or 50 or 100 years. And so automated nutrition is a fantasy idea of mine that, actually the process of eating is going to basically disappear. And that we will eat food recreationally here and there for nostalgia's sake, but nutrition will actually become more of an automated process, and maybe I'll explain that later. Quantitative investing seems to be superior to non-quantitative investing, so I think that it's basically been relegated to a very select, very lucky few, and that might actually might actually explode and become something that everyone can get access to these high returns, which I think would make us more productive. It might also just create inflation. I'm not sure. Flying cars is up there. It's great. Hyperloop and other modes of travel are interesting. Brain-machine interface, you saw one video earlier. I'm not so sure I want my head sliced open to get one of those things, but it's kind of an interesting possibility. Machine learning and AI will be parts of all kinds of things in business, and I'm not as excited about it as everyone else is. But we'll see. Telemedicine is a very simple way that we can extend the great medicine boom we've had and actually start to address the 80% of the healthcare costs that are out there that drugs aren't a part of, like physicians and hospitals. And I do think that being able to Skype your physician or Skype a Watson physician or something like that, some kind of AI physician, is something that could lower healthcare costs somewhat dramatically. I'm working on Google 2.0, which is my software company, Godel. You can actually go to sign up for I wouldn't call it Google 2.0 just yet, but you can sign up for a beta at godel.systems. So just go to godel.systems and you can fill out a form. If you fill it out with your LinkedIn, you're about 10 or 20 times more likely to get a beta version of Godel. So I joke that it's Google 2.0, but if you have a very long patience for an analogy, I think it's that's sort of the idea. Anyway, drones and logistics will also be dramatically, that'll be a much bigger part of driving efficiency than anything else. 3D printing or teleportation, this is getting more into 50 or 100 years from now. Space exploration, time travel, these aren't just sci-fi things, I have some sophisticated thinking on this. Quantum computing, etc. The biggest one that I eventually will work on, I'm not trying to do my best Elon Musk impression here, but I actually think sleep is our biggest productivity time waster. If you think about all these things add to one part of the equation, which is productivity, but the productivity is, like I said, it's a quotient. So if you think about productivity, it's output per hour. Well, everything's focused on increasing output, but very few of these, maybe just one or two, are focused on how many hours do we work. And I actually think that the need for sleep There's a video game called The Need for Speed. I should call it that. The need for sleep is arguably unnecessary. That we actually don't need to sleep at all, and that if I could invent a pill that would require us not to sleep, that those 8 hours of your day, literally a third of your life, is wasted. And if you think about it logarithmically, you actually are wasting quite a bit of your opportunity, and that with one pill, maybe taken once a day, you wouldn't need to sleep. I think that'd be kind of a cool invention. And again, not commercially maybe the greatest opportunity of all time, but from a productivity perspective, I'd put it up there with Windows 95 as to how much it would drive our help. Of course, we have a tremendous need for sleep. I particularly do, but if you could synthetically generate sleep through some biochemical process, if you look at BDNF or sharp wave complexes, it could be possible to actually induce some kind of rapid sleep process, and that would be quite a productivity booster. So why is all of this interesting, and why is like one blip in a quarter of productivity not important? Here's kind of a more sophisticated analysis of it. So if you actually take that quarterized, in other words, you de-annualize it into a quarterized process, you know what I did is I drew these lines. So this is, you call it AUs or arbitrary units. So I started at 1 as the arbitrary unit. And what I did is I tried to figure out how much time it would take to go from 1 unit to 2 units. And it took 101 quarters. It was real data. It took 101 quarters, and you could divide by 4, what is that, 20, 25 years, to go from getting 1 unit of work, or $1 per hour, or whatever you want to call it, arbitrary unit for every hour work, to getting 2. And right now we're about 4 point something. And what I found was really interesting that this actually kind of obeyed a linear progression for the first couple of units. And then it started to move a little bit differently. And you can see the slope got quite a bit more sort of steep. And what's interesting, and this is really, really important, because I think this is what the even very sophisticated writers at the Wall Street Journal don't understand, this, is that productivity is something that is accruing constantly. And that I only have data from the Bureau of Labor Statistics from 1949, but if you think about inventions before 1949, telephony, et cetera, productivity is actually maybe going logarithmic. And you can see just on this sort of shorter, it's 80 years of data, so it's not that short, but this shorter time frame, that these incremental inventions, the average of productivity at 2 or 3% is still, that's on top of prior gains. So this is really large boosts of productivity. So we only needed 46 quarters or 4 years to go from 3 units to 4 units, whereas that amount of increase, that quantum of increase, took 25 years some other period ago. And so we're on pace to take 80 quarters to go from 4 units to 5. Now again, a lot of our inventions, quote unquote, in the last 5 or 10 years have been somewhat less clear that how productive they are. Things like Facebook and I don't know, other social media tools. They're certainly productive in some ways, and how they truly are productive may take many years to be seen. But I do think that they're useful to a certain extent. They're new abstractions of the internet, which isn't a new tool. So I think the VC community and some other smarter capitalists are right to start thinking about non-internet solutions. That what we've got left on the internet is actually pretty limited, and that we need to sort of start to transcend again. So those are some of my thoughts on sort of productivity and VC and tech and stuff like that. I hope you found it interesting. So I'm going to spend a few minutes taking some questions that I gotten through email. Cryptocurrency, I'd say that I get probably 30% of my questions are about cryptocurrency. It should probably be closer to 1 or 2%, maybe 5% of the questions. It's interesting. It's not that important. Currency is fine the way it is. There's not a lot to gain from cryptocurrency, in my opinion. The audited blockchains and things like that, we have synthetic versions of that. If you I don't know, if you wired $1 million to your friend who used it to do something bad, the world can find that out pretty easily. So we actually have more of a cryptocurrency system than you might think. That in fact there's the SWIFT system and other systems that really do trace currency transfers very closely. So I wouldn't get too excited about cryptocurrency. Again, it's not worthless. There's certainly some advantages, but it's not a revolution relative to some other things. So Christian asked, so thanks for that question, Billy. Christian asked, why are 6 to 8% discount rate? And I actually think it was really interesting that Warren Buffett talked about this a little bit, that he thought about using discount rates. He talked about using discount rates. He kind of submerged his comments into a more complex way. But he basically said that, what discount rates should be and what they are, and kind of what he uses in his models are a little bit different from what other people are using. And I use 6 to 8% because roughly those are what long-term interest rates plus equity risk premium look like. So that's my answer to that. Regarding Airbus and Boeing, I don't follow these companies. I did a long time ago. I followed Boeing and Lockheed and so forth, Raytheon, but it's been a long time and I don't have any opinion on that. Austin asked about some job advice. I don't know you. I can't give you job advice. You might be good at one thing and not good at the other thing. I couldn't tell you. Roche is a big pharma company. Florian from Basel asked. Roche is based in Basel. I think Roche is fairly valued. For every good thing you mentioned in your email, there's a few bad things that sort of offset it, and it's a relatively fairly valued stock in my eyes. How do you value unprofitable companies? Question from John. The same way you value profitable companies. A stream of cash flows is valuable because eventually even unprofitable companies want to be profitable. If it's going to be unprofitable forever, obviously it's worthless, but it's the same exact thing. Why do I regret going to investing? When I say I regret going to investing, it's a little bit tongue-in-cheek because I've done so well being an entrepreneur. But the related question is, are investment skills useful for entrepreneurs? Sure. In fact, Buffett recently said he's become a better businessman by studying investing, and he's become a better investor by studying business. And I think the same exact applies. I get this question a lot about panic disorder. I do suffer from a panic disorder where I used to have panic attacks. A lot of people have this, about I think 40 million people at some point will have panic attack in their life. It sort of runs in my family. Seeing a physician is often the hardest step. Mental disorders are a little bit taboo, but panic disorder is a very visceral physical thing, and it's just go to a doctor. There's nothing to be scared of. Are markets efficient? The downsides of doing this vastly are outstripped by the upsides. Are markets efficient? I get this quite a lot as well. I think most of the times markets are very, very efficient, hence my comment about 8 out of 10 securities are fairly valued. Sometimes, though, they are inefficient. Like I said, that's the reason I have this list of stocks I like. In these cases, I'm betting the market is being inefficient, these 13 securities. And so, in essence, most of the time, you should be able to find some efficiencies. In other words, the market is never totally efficient. There's always some diamond in the rough somewhere. And that includes not just markets for the public markets, but private markets and bonds and you name it. Any kind of asset that you can trade. So markets are kind of efficient, pretty much efficient. You should never think you're getting some kind of free lunch. You should never think that every stock you buy is really cheap. It's pretty tough to sort of figure it all out. So those are the 10, I answered about 10 questions there. Keep them coming. You have my email. Everyone wants to know what to read, what to study. There aren't enough hours in the day, but there's a new book by Sam Zell. Sam Zell's a real estate billionaire. It's called Am I Being Too Subtle? Pretty much any time somebody who's made $1 billion writes a book, you should buy it and read it. It doesn't cost you much to read the book, and if the person is one of the most successful people on the planet, it's not going to kill you to read it. Read all the Warren Buffett annual letters and his partnership letters. Those are a little harder to find, but you should be able to. He managed a hedge fund when he was a kid, 20s to 30s, and it was called the WV Partnership, and you should be able to find those too. Those are super interesting to read. Don't just read finance stuff. You can read poetry and fiction and expand your mind in more ways. And these, in fact, will probably expand your mind more ways than these two. So don't neglect the rest of your life. You meet a lot of kids who love being want to be business people, and they want to be really sophisticated business people. But if you haven't read Walt Whitman, then I'm not sure that you're that qualified to be a great investor. I know that sounds a little kooky, but I believe it's true. All right, I made it right under an hour here. I do have a new Twitter. It's BLMBro, hashtag Black Lives Matter. Don't tell anybody, but you can follow me on Twitter at BLMBro. And you can email me more questions for next week at martin@thoughtpatrol.com. If you email me a really interesting question, I'll just respond to you right away. I removed a few things for future topics I'm going to cover. How do you handle a stock moving the way, not the way you thought it would? Which was asked by Angel. Great question. I'll handle that at some point. I will definitely talk more about brain-machine interfaces. I did a little bit here. Keep adding book recommendations. I don't know that I need to have that. Someone wants to know about triple levered ETFs. That's actually a pretty interesting topic. Valiant and Theranos postmortem is definitely something that would be fun to do. Eventually, I will do a deep dive into how the Federal Reserve works and why their balance sheet dynamics are not as interesting as I think people think they are. That's it. I took up an hour. Thank you so much for coming. Really appreciate your time, and this series has been a lot of fun for me. I hope this one was a little more interesting than the last two, but any ideas on how to make this more fun and more interesting, just shoot me an email, martin@thoughtpatrol.com. Thanks so much, and I'll see you guys next week.